Hello everybody. So the title of this video is it very stupid to add stretch to your balance sheet as a company different from strategy, as a business? Is it very stupid to do that because a MSTR community member got attacked? Of course, we're still going through the turmoil, and somebody with the eloquent use of the English language, right? Shakespeare would be proud of this mastery of English language, called this tweet from Jeff Walton, called it very stupid. Again, kudos for the mastery of the English language here. And what is the crux of the argument? Well, this person asserts that you have an instrument, which is SETA, which is paying a 13% interest rate, and they invested that 13% yield that they're going to have to pay out, the money. They're going to take your money, you give them 100, they're going to pay you 13%, and they're going to take some of that money, and they're going to park it in stretch, and stretch yields 11.5%. And so you're like saying, they're saying, this influencer is saying, oh, well, they're investing your money at 11.5% and they're paying you 13%. Oh, they're losing 1.5%. And, casting doubt on the whole financial structure, not understanding the nuance. So there are, of course, major problems to this argument. Problem number one. You're conveniently omitting the fact that Strive is investing $1 billion in Bitcoin. And of course, if you are a Bitcoiner and you see $1 billion in Bitcoin, you believe that this will grow. Well, Saylor says 29% ARR. I am sure Strive has their own model with their own view of how much it will grow. But the odds are it's going to grow faster than 13%. And so that delta between 13% and whatever the number 20 odd something is going to be, it's most likely going to be in the 20%. That delta is omitted, and you're only focusing on the most minor part of the balance sheet, which is 11.5%, and saying we're paying 13% and investing at 11.5%. It makes no sense. That's the problem number one with that argument, is you're omitting that most of the money, in fact, goes towards Bitcoin. Most of the money goes towards Bitcoin. Now, problem number two is that this person is ignoring the reason why there is cash on the balance sheet of Strive. The reason why Strive and Strategy decided to hold cash on the balance sheet is to have enough cash-like money, cash-like instruments available to pay the monthly dividend in case of a prolonged drawdown. May I point out that we are coming out of 6 months of despair since 1010. This is why these companies have started in December of last year. They've started to say, okay, we gotta have a little cash on the balance sheet just in case there's dislocation in the market for like a year. We can still pay the dividend for a year without having to raise money via dilutive, issuance of new shares, right? Because these companies don't want to dilute, they want to accrete. So in general, they don't want to issue their shares when MNAV is below 1. And of course, when there's turmoil in the market is when you're likely to have MNAV below 1. And so in these situations, if you didn't have the cash, you would need to dilute the common. And of course, they don't want to do that. So the purpose of the cash, whether it's STRC or actual cash, the purpose of that cash is not to earn money. The purpose of that cash is to improve the credit quality of the instrument by having cash set aside in case of periods of extreme volatility. That is the purpose of that cash, not to earn money. Acting like the purpose of that cash is to earn money is entirely moot. It's a moot argument. And then there's point number two that I want to make, digging deeper into the cash buffer issue. And I guess we'll have new thoughts here. So, of course, Strategy only has cash. Strive has both cash and Strategy's STRC, right? So, first of all, let's talk about the cash portion. That cash portion, we don't really know how much money they're earning, but my guess is going to be pretty close to SOFR, the Secured Overnight Finance Rate, SOFR. They could also do like very short-term commercial paper, which doesn't really move. So my guess is a little north of 3.5% is what both of these companies are earning on the cash. That would be my guess. Now, you also gotta hope that that cash is spread out across multiple banks who should not be named, by the way, to prevent any hacking and any attacks and any panics. But you better hope that, for example, Strategy has the $2.25 billion that they have it spread over, I don't know, 40 different accounts at different banks is probably what I would hope, right? In order to diversify away from the risk of a bank run. And companies usually do that, right? Companies usually diversify. You don't want to be the Roku. You don't want to be the Roku. Remember Silicon Valley Bank. Most companies were not impacted too much by Silicon Valley Bank because they had spread their funds. And so you had a flurry of companies that weekend who were like, yeah, we have 30 million at risk. Yeah, we have 50 million at risk. And then you had Roku who released a warning saying, yeah, we have all of our cash there. So we have 400 plus million at risk. Right? Companies usually don't do that. Companies, when they have cash, they typically spread it across multiple banking partners of all sorts, to prevent from that issue of if a company goes down, you lose the cash, you lose the money, you lose the funds. Because that cash that you have in a checking account is protected by fractional reserve banking, which, surprise, surprise, fractional reserve banking, the minimum reserve requirement used to be 3%, so it wasn't much, by the way. But they dropped it. After the events of 2020, the Fed dropped the reserve requirement in the fractional banking system. They dropped it to zero. Banks do not have to back the dollar that you have deposited with them. It's all a system based on trust. The whole thing is based on trust. This is why these companies spread their bets across multiple checking accounts or across all sorts of commercial paper from all sorts of different companies and try to diversify just in case there is a bank run risk. Money in a checking account is backed by nothing. And this is why Stretch is a very powerful instrument for Strive. Because unlike money in a checking account, unlike bonds, and bonds have their own problems because bonds deal with the issue of correlation goes to 1 in a crisis. You may have noticed that during the Middle East event, bonds were down too. So owning bonds also has the problem of volatility. There is some volatility in the bonds. They have not performed flat, right? They've been volatile to the downside with risk off periods. So there is the issue with the bonds, but of course the other issue with the bonds, even a government bonds, is you have 3 shutdowns a year. The government bonds are not AAA rated anymore, and you have 3 shutdowns a year. So even that, like even bonds, I know we still call them risk-free rates because it's an artifact of the 70s, but even that is not risk-free. So money in a checking account is not risk-free because the reserve requirement from the Fed is 0. It's an IOU. It's just the debt the bank owes you. That's it. Okay? And then the money in bonds, government bonds, is not risk-free either because you have shutdowns. 3 shutdowns a year. Talking about coupons being delayed. Coupons being skipped, perhaps. What if, and like I'm sorry to pick on Belgium, but that happened to Belgium for like almost 300 days or something. They didn't have a government. Could the US government have a shutdown that lasts 300 days? Then what would happen to the coupon payments? And then, of course, these companies rely on these coupon payments. If they need the cash, they need the money to pay their own dividends, so they rely on it. So my point is, I entirely understand why Stretch as a CentiStable coin, as a $100 bill backed by Bitcoin and not backed by trust of the government or not backed by the fractional reserve banking system and the 0% reserve requirement, Stretch is backed by Bitcoin. I understand why this is so so appealing to any company. And of course, when Strategy has at its yearly conference a few months back, Saylor presented quite a few businesses, some of which had nothing to do with Bitcoin, by the way. There was this energy company who bought 10% of their treasury in Stretch, who put 10% of their treasury in Stretch. Like some, I think they were a Japanese company or something, like a totally random company, nothing to do. So to me, the adoption of an instrument like Stretch by corporate treasuries is going to be a major trend. And then the final question is, will MSTR do the same? So will MSTR adopt money backed by Bitcoin at some point? And, I think a fair question you could ask is why wouldn't MSTR actually place some of their cash into SATA? Well, the reason is very simple. SATA has not really traded at 100 consistently just yet. Right now, there is only Stretch who's done it, right? And of course, Saylor can't buy its own instrument. You can't buy your own stock. I mean, that would make no sense, right? Because you would be taking money coming into the business and putting it back into the business. So that would make no sense. In order for Saylor to do that, he would have to find a Stretch equivalent somewhere, which it doesn't exist yet. At this point, it doesn't exist yet. But down the road, do I see it as making sense as Saylor's cash reserve actually being backed by SATA and other types of instruments issued by other companies? In my view, that would make absolutely perfect and total sense. And that, in many ways, could be seen as much, much, much better than putting money in a checking account, which earns SOFR maybe if you're lucky, and which is backed by zero reserve requirements. So anyways, hopefully you like my demonstration here. Again, maybe more of a technical video today, but not that technical either. It's not, this is not as elite as using words like very stupid. You see, that's elite. Me, I'm just a small YouTuber. So anyways, this was not investment advice. This is not financial advice. This is only entertainment. I'm hoping you're entertained. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you for watching, and have a wonderful, wonderful day.